Hello everybody, welcome back to our YouTube channel. Today we want to talk about Bob.
What about Bob?
Bob is the owner of Credit Repair of New Mexico, and he has been doing this for 9 years. But prior to that, he has had a lot of experience in underwriting and banking, so he knows the things that need to happen to get a homeowner or a person to purchase a home. Right, Bob?
Yes, that's exactly right.
So you've helped a lot of my clients, and you also helped me at one point too. So we all need help, coaching. You mentor us on what to do, what not to do.
Yes,
right?
that's very, very important in the process, because I not only repair credit, but over the past 9 years, I think there's only about a handful of 5 people that have to come back and say, I need your help again. That I like to educate, teach, and show them how to keep your scores 700, 800, whatever it is, so that they can enjoy not only the new home, very low interest rates like car loans and credit cards and things of that nature. But that's very important to say, because you need to mentor and coach and let them know exactly what to do to always have good credit.
So Bob, what's the average time that it takes to repair or to get someone? Is there an average time, or is it very individual basis?
Over the years, actually, I'm very number-wise statistics, so yes. 3 to 6 months is usually the average. I have fixed things in 11 days. That's Susan Blank. Walt Sanchez, I fixed it in 11 days. I said, look for this in the mail. If you get it, you're good. You got it, we've closed.
Wow.
You know, but there are two files I had took them almost a year, because they had thousands of things to get done. So I can answer the question more accurately once I review it from the top of all the way to the bottom of the bureaus, and then I'll know, because there's a lot of things to take into consideration. How many collection accounts are there? Are they medical? Are they some credit utilization, past delinquencies, age of credit? There's a lot of things that go into that determination, but the average is 3 to 6 months.
That's great.
But also, guys, it's very important. You don't just go commit yourselves with Bob and forget about it. You actually have to do what he tells you to do. It's not going to be useful if they don't follow your advice, right? I wish it happens a lot.
It does.
And that's probably why it's taking longer a lot of times, because of the...
You know, I want to point something out on that. For example, a lot of times I'll have someone do a secured credit card, because that's FICO loves secured cards. And if they use it the way I tell them, they will maximize the points sooner than later. And that does happen, and they go and they max it out, and when I told, well, you know, and they don't pay it down again. So, yeah.
And we together have had a few experiences with customers that were almost ready to purchase a home, and they go out and they get a payday loan, because at finance companies, they're going to tell you, this is going to improve your credit and it's going to be great for you. Just get it. Even if you don't need the money, if you just go in, that's what they're going to tell you. So tell us about the finance companies.
Wow, you're on target today. But, you know,
Say no.
I've done this for so long. We have live webinars every Wednesday, you know, and one guy that's on it is John Alzheimer. If you Google his name, it's Alzheimer, but with a U. And he worked for, when he speaks, it's gospel. You know, that's how FICO, he worked for FICO for many years. He helped FICO develop models they use today. 5.5 years ago, we were at a live webinar on Wednesday, and he said, FICO has changed the way they deal with, they score finance companies. They're negative even if you're making your payments on time, because FICO all of a sudden says, oh, you couldn't qualify in a bank, you had to go to a payday loan, so we're going to dig you on it. So more than 5.5 years ago, they were right. Finance companies, yes, that was helping a little bit. Not since John said so, okay? Then what they do is they talk you into, after you finish paying this off, here's some more money, pay off some more things.
Oh, wait, the new thing, refinance it. Don't pay it off, just refinance it.
In either case, whether it's you're refinancing or they give you more money, you're still re-aging. Aging is 15% of the score. Okay, out of all the 35, there's past delinquency, 30 credit users, age is 15. And so your overall age of your accounts went down, so does your score. Then, if you ever get late, you get a triple whammy on a finance company. So people don't deal with finance companies.
So re-aging means it's like opening a new account,
Yes.
so it affects you because your average
Age.
time goes down.
Mhm.
Okay, that makes sense.
And you're probably maxing it out
Yes.
too.
And and the other thing is, I'm privy to it because statistics, I'm really big. There's scorecards, but then there's sub-scorecards between those. So one extra account, I did one last December for Discover because they said, oh, well, I like to play the game because I'm in the 20s or whatever. So 0%, no annual fee, 0% for 18 months and then whatever. If I ever need to use it, I just pay it, doesn't matter, I will never pay interest. So a new account for me would be 2 points, period, and then after a couple months it'll go right back up. But someone that's in a certain sub-scorecard, they don't really have the best of credit, they're delinquent a little bit, their credit utilization is pretty maxed out. That one extra hard inquiry and new account could tank them 50 points, like that. So
And
I
even
always
if they
tell,
don't get the new account, it will affect
Because
them.
the-
Because
because
then they're
also
denying them.
well, inquiries are 10% of your score, and then the age is 15. So even if they don't take it out, that even hard inquiry could be 50 points. I've seen it, So that's why I tell people before you go and do anything. That's why once you start with me, I'm coaching all from the beginning to the end. Because if you do, oh, I need to go buy a new car. Okay, sometimes that's. But please run everything by me first, so I know how much it's going to affect you if you're in a sub-scorecard.
Now, here's another thing and I was just meeting with a client last night, and they are ready to buy a house. They mentally, emotionally, they're just ready, and they have some collections accounts, and they decided, let's go set up payments with all of these collections accounts. And their credit his credit dropped 90 points.
Correct.
So can you explain to us why that? I mean,
Yes,
people,
I can explain that.
they're
yeah.
saying, well, but I'm paying on time, and I made arrangements with them. Still 90 points off their score.
Again, they might have been in the sub-scorecard, but also what's happening is FICO is reading it as recent collection activity. So now the newness of it comes in and the collection activity. So FICO freaks out and you get lost.
Even if it's $1 difference, right? I've seen that on my
Yes.
credit.
Yes.
Not that I have collections
Once you pay
accounts.
one penny to a collection
Yeah.
thing, that's going to happen. That's why when I review from top to bottom, I'll know if that's something that should be done, not to do, yes to do. Most of the time, it's not the best thing to do. See if I can get it deleted first. But there are different circumstances where, it's because being an underwriter, Fannie Mae, Freddie Mac, some things could be done where you can close and it'll say this thing has to be satisfied on or before closing. You do it at closing. Put it on the HUD. No one cares. Your scores will drop after you get the keys, but then you can build it back up again. See, so that's the key. A lot of people don't understand that, but being in the banking environment, like you said, I have privy of all the rules and regs to how to get people into it.
And it's so complex. I mean, it's just insane to try to cover everything in a 10-minute video.
Sure.
But thank you guys for tuning in. We hope to have you over more often, Bob, so we can continue talking about these things. And don't forget to subscribe to our channel and like us and share this video with those that you think might be benefiting from it. Thank you.